Hello traders, today as usual we are analyzing the pound dollar pair, this time for the week from October 31st to November 4th, and right at the beginning I want to welcome you to a very busy week as it is packed with market moving economic reports and events. So we are going to look at each of them. Most importantly, for the pound dollar pair, will be the central bank meetings from the US and the UK on Wednesday and Thursday, respectively. And of course, we have the non-farm payrolls on Friday from the US. So all those things will affect this pair. We're going to look at the technicals at the end of this video. So starting from Monday, nothing much on Monday, but on Tuesday we have some important event from the UK, and that is the manufacturing PMI, which of course, if it comes worse than expected or better than expected, will have an impact on how the Bank of England decides on Thursday. Then on Wednesday we get the construction PMI from the UK. On Thursday, right before the central bank meeting, right before the Bank of England meeting, a few hours earlier, we have the services PMI, and all of those three PMIs will affect how the Bank of England thinks and decides on the interest rates. Of course, also we get the Bank of England quarterly inflation report at this meeting, the monetary policy summary, and the bank rate votes. This will be important also if someone votes for cutting rates. That will be bearish for the pound. One thing I want to add here is that judging by the recent increase in Brexit risks, the PMI reports are likely to come weaker than expected, at least slightly. So that's just a higher probability, doesn't have to be the case. But when risks increase, business confidence usually drops. So with that in mind, it's more likely than that the Bank of England will be more dovish than expected, rather than hawkish. So that should keep the pressure on the pound. Now on the US dollar, the situation is different. The FOMC meets on Thursday, as we can see here. But on Tuesday, we get the ISM manufacturing PMI, from the US. This is the report. And again, this is measuring the manufacturing sector, but it's unlikely to have a big impact on the Federal Reserve and how they decide, since they were very hawkish in their recent comments. And with that in mind, a more hawkish than expected statement is the more probable scenario rather than a more dovish than expected FOMC statement. And with that in mind, the risk is to the upside for the US dollar, contrary to the pound. And it's likely that the US dollar will probably appreciate somewhat, at least leading up to the meeting, because most market participants will expect the Fed to be hawkish. If the Fed disappoints, however, on Wednesday, then we'll get, very likely, we will get a dollar correction, a deep retracement in the recent rally of the US dollar. And lastly, as we said, the non-farm payrolls on Friday, as usual, with the average hourly earnings, and the unemployment rate. So these are the three important events for the end of the week. So as I said, a very busy week. In addition, next week on November 8th is the US presidential election. So you must also keep in mind some political risks during this week. And with that in mind, the pressure for a pound dollar is more likely to be to the downside. As we said, a more dovish Bank of England is the more likely scenario, and a more hawkish than expected Fed is the more likely scenario for the US dollar, and that puts the bets on the side of the US dollar for this week. So here's how the pound dollar chart looks like, the daily chart. Clear support here at 121 first, then here at 120 lower, and clear resistance at around the 123 level, we can say, from 120 to 70 up to 123 20, and then around 125 up here, but that level is very far right now. Now let's switch to the 1 hour chart. This was the 4 hour chart. This is how the daily time frame looks like. On the 1 hour chart, the important thing you can look at is this small channel that could give you an early clue on where a pound dollar will trade. But as I said, most of the price action this week will be determined by the fundamentals, all of those events that we spoke about, and that's what traders should be focused on during this week. And wild price swings cannot be excluded. The price may go from one direction to the other, switch directions multiple times, as many risk events are one after the other. So trade safely, guys. Trade what you can afford to trade. Don't enter too large positions with too many lots. So keep your lots to the lower end, to the minimum, and stay safe during this busy week. So that's about it, guys, for this weekly video, and for tomorrow, for Monday. So that's about it, and thanks for watching. I'll talk to you in the next video.